Welcome back to the Trading Bell Show, and joining us to help us understand this conversation post-budget reading is the head of research at Genghis Capital, Churchill Ogutu. Thank you so much for coming in. And of course, the head of research at AIB Axis, Sarah Wanga, to help us really understand, as investors, what do we expect to see? But before we get into that conversation, I just wanted to ask them about their immediate reactions from what we've just heard from Job at Kenya Association of Manufacturers. I want to ask you, Churchill, what would be your sentiments on what he has just said?
Thank you, Maina. Just reacting to what Job has said, I fully agree with the sentiments. Looking at the manufacturing sector, it's one of the big four agenda items. And looking at even the budgetary allocation, this is speaking on the expenditure side, is quite paltry against the goals that have been to be realized from the big four agenda in regards to manufacturing. And on the taxation sides, there are few misses that you've seen that were highlighted by Job, the head of research at Kenya Association of Manufacturers. So I fully agree with him. Having said that, we're still awaiting the report from the Finance Committee in the National Assembly. This committee now scrutinizes the proposals that were put there in the finance bill, and it gives its recommendation. So by and large, broadly, perhaps some of the misses that you've seen so far that have been contained in the finance bill as relating to manufacturing sector, some of them might be peeled back so that they could be a bit constructive to the sector. So by having said that, as it is right now, just think that the taxation measures will be a heavy burden to the manufacturing sector.
Okay, thank you so much, Churchill, for that. I don't know, Sarah, what's your comment as well from what we've heard from Job?
I think I agree with them. Taxation seems to be a big area of concern. Yeah. And I think in the Big Four agenda, we saw their goal was to increase size of manufacturing sector to 15% by 2022. Yeah. I don't think that will happen. And I think one of the reasons for that would be the heavy taxation of the sector. So in the financial year 2017-18, the sector was contributing 8% to GDP. Yeah. However, the latest figures we've seen the sector has reduced, so currently contributing around 7.2% to GDP. Okay. So I think one of the reasons for that is that they're taxing the sector. So as he'd mentioned, the focus is on increasing the tax rate instead of increasing the tax base. Okay. And the effect of this is that they're actually collecting less from the manufacturing sector in terms of taxes, even as the tax rates increase. So I think that's something the government needs to look at. So it's not just about increasing the rate, because the effect of that on this sector is that we've had a number of businesses shut down, and so economic activity is reducing in general. So it's likely that they will not achieve their goal of increasing the sector to 15% of GDP. And I think, that's a concern.
Wow, lovely sentiments there from both our researchers here. And, just moving on, let's get straight now to the markets, how we have been performing. We want to look at the week to week. And Churchill, I want to start with you. We have interesting names on the top gainers. I can see Transcentury, I can see Flame Tree, Eastland Portland Cement, Nairobi Business Ventures, and Ochubi Supermarket. I don't know whether you have a comment on the top gainers.
Yes, last week we saw Transcentury, specifically on Thursday. They had its AGM, and one of the issues that were to be discussed in the AGM was now this rights issue, close to an additional 2 billion additional shares to be brought to Transcentury. And they were looking at it after the approval of that 2 billion new additional shares for the right issues. It will lead to 5 new issues for every one issue that is there. Speaking for Transcentury, looking at the numbers, it's just that 2 weeks back or 3 weeks back, they were releasing their numbers as at full year 2019, thereabouts. So that was the agenda for this AGM. So they are still back behind the curve in terms of releasing their financials. And even the numbers that you saw that were released by Transcentury they are deep in the red in terms of their equity position. So that is the crux for this rights issue. So we've seen a bit of some rally by investors who are now taking it in positive light, this approval of the rights issue, bouncing 24% in the last 1 week. So that's majorly some positive news by investors just taking in this rights issue information. The other names, they are just speculative trading that now took them into the top gainer position week-on-week basis. So, but the main counter there is Transcentury, which was the top gainer in the last 1 week.
Okay, thank you so much for those sentiments. Let me just jump into the top losers, and I want to bring you Sarah. I can see very interesting names as well, especially in the construction and allied sectors. I can see even Bamburi affected there. What's your sentiments generally on the top losers, especially when we look at Bamburi?
So with regards to Bamburi, I think my view on Bamburi is that it's a good buy currently.
Yes. Mm-hmm.
And
so it's a good buy for people.
Yes, it's a good buy, yes.
Yes. Mm-hmm.
I think probably one of the reasons made it there to the top losers was probably profit taking by a few investors. Yeah. But generally, we've seen the stock rally over the last 1 year. Yeah. So last year it was trading, it actually touched a low of 19.9%. Yeah. So currently at 30s, that's a real people have made money on that stock. Okay. Yeah, and so in terms of the prospects of the company, we're seeing a lot of construction going on, government constructing roads, even in the individual sector, private sector, we're seeing buildings come up. So we've seen, generally, if we look at the leading economic indicators from the KNBS, we've seen an increase in both cement production and consumption. Yeah. So that should help push up Bamburi's revenues. So this year is likely to be good for Bamburi. So it is a counter that someone should definitely consider.
Very interesting, and I hope you got note of that. This is a good buy for you. Churchill, and I wanted to throw you and ask you what's your comment on the good buy for this season. But before then, I think you can mix it up with a comment on the indices. I see almost zero movement happening, but what's your comment, sir?
Yes, for the NSE All-Share Index, week on week it has moved 1%. And if you look at the indexes, specifically for the Nairobi All-Share Index, that's a market cap weighted index primarily. So I'm talking about those stocks that have a bigger weighting in the market. Safaricom is over 60%, and then we have the banking sector, another 20%, so collectively 80%. So ideally, the movement in this particular index, the Nairobi All-Share Index, is primarily driven by those two sectors, the telco, that's Safaricom, and also the banking sector. So as they move, their price movement week on week now dictates even the Nairobi All-Share Index. Getting on to the NSE 20 Share Index, of course, the 20 biggest counters are thrown into this index, but primarily also we are looking at even the price weighting, in a way, price weighting index. So not much movement, as you mentioned, is quite muted from that perspective as compared now to the NSE All-Share Index, which was quite at least robust activity in the last 1 week.
Okay, thanks a lot, Churchill, for that. Of course, I don't want to leave you still. I want to still put you on the spot, especially because I want you to mention, especially on the bonds market, I've seen a lot of activity happening. What has been your observation? And should investors, open their eyes wide so that at least they can tap on the opportunities we are seeing?
Yeah, lots of activities have been happening in the bonds market, mainly looking at the infrastructure bond segment. This is the beauty about infrastructure bond are those bonds that are not taxed. So we've seen a number of transactions over the last couple of weeks in the infrastructure bond, in as much as we have a primary bond auction, which the results will be out today, reopening of some two papers, tenor of 11 years and 18 years. So in terms of the bonds activity, of course, investors have been looking at, outside these two issues, they've been looking at opportunities in the infrastructure bond segment. And what has been telegraphed by the market, or rather the CBK, looking at the T-bill segment, The last 5 auctions, basically starting from the month of May, we've seen that the yields have started to come down. So that has led to Latitude by CBK just to reject aggressive bids. So from the thinking by investors is that, okay, at this point in time, the fiscal agent, or rather the treasury, is ahead of its borrowing curve. And that's what is giving it wiggle room to reject these expensive bids that is coming from the T-bill segment. So that's by the policymakers.
All right, thank you so much, Churchill, for that. Let's move to the top movers, and I see, of course, the usual names, but I can see Safaricom really had some serious volumes, and I can see the banking sector almost taking the entire other part. What's your comment on that, Sarah?
So with regards to Safaricom, we've seen the share price gain, and mainly at the beginning of the year, it was mainly because of the addition into the MSCI Frontier Market Index. So that attracted foreign investor inflows into the counter. And then recently, there was a story about the entry into Ethiopia, which investors view as positive and would increase Safaricom's revenue in the near future. So that is one of the reasons why has led to the rally of Safaricom. An increased interest in the counter.
Great.
And on the banking stocks, so last year was a really bad year for banks, mainly because of the non-performing COVID. So non-performing loans increased for the sector, and so they were forced to provide for those loans. So that affected their profitability. So this year, it seems like businesses are slowly improving, so people are able to repay their loans, and so we've had an improvement in terms of the bank's books. So in terms of profitability, they're likely to increase for most banks. Even as we look at first quarter numbers, we saw a number of them report positive earnings. And so investor sentiments around these counters has increased. A number of companies did not pay dividends this year, mainly because of they needed to preserve the capital. So our view is that as the economy improves, the performance improves. So next year we'll see dividends come in. So we see a rally in this banking sector stocks.
Certainly some good hope for the banking sector right there. Well, we are coming to a close, and I would like your final parting shot, and I want to start over with Churchill. I don't know what will be your final parting shot to investors this season, post-budget reading. What will be your last sentiment? Is it hopeful, or do we wait and see? Over to you, Churchill.
It's a mixed bag in the sense that there are some names will be affected by the taxation proposals that are contained in the Finance Bill 2021 and also the Finance Act 2020. BAT Kenya is expected to have some negative impact because of the taxation proposal on its new product lift. EABL, the usual inflation adjustment of excess duties, heavily impacting on EABL, but some of the names are still just will be impacted by the general trajectory of as the financier rolls out. There are some banking sector of bills, but that is at the back burner. That has already been heavily priced in the market. The issue around pending bills and also the NPLs. So it's just a matter of looking at the names that will be positively affected. But also having said that, there are those in the NSE that have a government shareholding stake, and those are usually dividend plays, names such as Safaricom, KCB, and also NSE has government shareholding. So those are the ones which will continue being dividend plays throughout the fiscal year.
Excellent. Thank you so much. Sarah, over to you. What's your final sentiments to investors?
I think I completely agree with Churchill. There's the good ones that have benefited and the ones that have not. And I think for me, what stands out would be just in terms of the sentiments for the year, would be the banking sector. As I've mentioned, the profitability is likely to increase. And then there's a lot of rally around Safaricom. So I think, that's it.
Okay, there you have it. Sarah Wanga, Head of Research, AIB Access, and Churchill Ogutu, virtually Head of Research at Genghis Capital. I hope you've gotten your take out, what to look out for in the markets post-budget reading. That's it for now here on the Trading Bell Show. Remember, you can always share your feedback with us on the social media handles appearing at the bottom end of your screen. And we hope to keep informing you so that you can make better choices when it comes to matters investments. Keep it Trading Bell. See you next week, same time, same place. Bye-bye.